Hey everyone, Bowen from Enhanced Asset Management here, just back with another update for your portfolio. This time it's the start of reporting season and we've had our first stock report, and that stock is ResMed. So ResMed announced their second quarter results for FY25, and in these results we saw a 10% increase in revenue up to $1.3 billion. And more importantly, we saw another 300 basis points of gross margin expansion, which flowed through the financials and resulted in a 52% increase in income from operations, and also a 50% increase in earnings per share, which again is just another fantastic result from ResMed. And similarly with our update 3 months ago for their first quarter result, it was really strong across the board. So we're seeing device sales growing at double digits in the US. We're seeing virtually double-digit growth in devices in Europe and Asia, and also mask sales and other devices are also up 11% across the globe, which is fantastic. We're also seeing the software business also growing at double digits, which is a high margin, high growth section for the business, which, across all segments, to see those sort of numbers again for the second quarter in a row is really impressive. And I guess the question of what's driving this revenue growth, apart from being the clear market leader in sleep apnea devices, is we're now seeing a lot of growth, and the business is seeing a lot of growth from people wearing watches, whether they're Apple Watches, Samsungs, Garmin's, Whoops, whatever it is. ResMed are partnering with these companies and these devices, given that around 36% of people are tracking their sleep using these wearables. And what these watches and devices are able to do is diagnose and let the client know when they're having some sleep problems and when they should see a sleep physician, which can therefore lead the pipeline of diagnosis for sleep apnea, which is making a fantastic runway for a group like ResMed to capture more and more of the market. And the best thing about the revenue growth that ResMed are experiencing is they don't have to generate 20, 25% revenue growth to generate a 30, 40, 50% net income growth. They are fantastic at providing operating leverage, and they have a very stable cost base now, which is basically just R&D and then staff and admin expenses, which they have really good control over. So you can see a 10% revenue growth at the top line can correlate to a 50% net income growth, which is the exact type of business that we want to be owning. Now, you can see the share price up on screen here. It's continued to have a really good run to start the year. Interestingly enough, we've seen a little bit of softness off the back of this result, which is a little bit odd given that we've seen virtually every analyst that we've looked at has upgraded their forecast, us included. So we're just seeing a little bit of weakness here, but we know over time that share prices will tend to follow earnings, and with all analysts upgrading their earnings forecast, we expect to see this one trading back up over $40 towards $45 pretty comfortably. As always, this is general information only. If you do require any further financial advice, please speak with your licensed advisor. We'll be in touch with updates pretty regularly over the next month as more and more of our companies update the market throughout reporting season. And until then, I hope you're all doing well. Be in touch shortly.